Okay, I see we have already quite a few people, actually more than half, from the people that registered. At this stage, I would like to say we are humbled by the interest and the number of participants in this small event, let's say, online event. We had more than 100 participations in the event, and we can just say thank you for attending today. So before we start with the main presentation, if I might just say one thing, right? About a year ago or a few months ago, when somebody would like to create an investment product, a structured product, and pull investors into that, well, having a no bank issuer risk or an off-balance sheet solution, as we call it, was maybe a good to have, best case scenario, but it was not something that people would, let's say, seek very actively, right? Since a few months after the events we all experienced with Credit Suisse and so on, it has become almost a necessity for most of our clients. And we're actually very happy to be in a position to offer a suitable solution for that, right? Having said that, today's presentation has a small agenda. As always, in the end, there will be a Q&A session, so I'll be looking forward to receiving the questions from our audience. And the presentation itself will be, first, I would like to give a quick business market update as we have experienced it here in Gen2 across the assets that we have received into our products, the number of issuers and SPVs that have been incorporated, and the actual products itself. Then we will talk very briefly about what the actual products are or can be for the people that don't have the, let's say, full overview. And then we will basically go to the main topic, which is the it's a deep dive into how our off-balance sheet structure works, how does the no bank issuer securitization really works on a client level, on a issuer/SPV level, on a product level, right? And finally, we will close with Gen2 offering in a nutshell. So what are the minimum sizes? What is required for an investor to buy? What are the investor types that can buy, et cetera, followed, as I mentioned before, by the Q&A session. I see we have the main bulk of our participants online. Once again, thank you very much, everyone, and we're ready to start. So Gen2 is almost exactly 5 years old, as the logo also implies. We're very happy to have experienced this level of growth. So last year, I think everybody can acknowledge that it was a pretty special year for the financial markets and the investment management world. Nevertheless, it was the best year on record for Gen2. We had more than 1.1 billion added into the platform, which followed by a very good quarter this year, Q1, brings us to 2.7 billion in dollar, actually a little bit higher by now. So we are very, very happy, I would say, if not excited, to see the market using our solutions. And I would also like to stress that this is not a situation where we had a very good quarter or a very big order or very big deal done, but we see continuously a very strong influx of assets into our products. So over the last few quarters, we have seen a rather steady and increasing number of assets coming in, with Q1 this year being the best quarter on record for Gen2, with almost $250 million flowing in. And once again, if under these challenging market conditions we can have this level of activity, I think that speaks volumes for what our framework can actually achieve, right? Here, just to clarify, we see the net inflows. So we have the sum of primary and secondary market rates minus the unwinds led by the clients that gives us those numbers, right? Now, with regards to where are the main areas of interest, for all the products, the funds, private equity, private debt, etc., we have this little map put together that's also accessible at the main pitch deck or main deck of Gen2, which is at our website. So as one can see, we have been active in, let's say, all the main financial hubs around the world. in this slide, you can also see that not only we have been doing deals in these areas, but we have been doing multiple deals, literally hundreds of them. And at this point, I would like to stress that within Gen2, we have in-house the expertise, mostly in terms of legal and structuring, whereby we, together with our client, we discuss what is the deal, what is the specific need and setup for the product, and then we can propose basically the most suitable solution for that. So talking about the products and the issues themselves, we have put together the evolution of the issuers across the products. As I mentioned, the main setup, let's say, we explained in a couple of slides. I just would like to give an idea of the development of the evolution of the numbers. So the SPVs, or the issuance vehicles, which are standalone and dedicated per client, have been also been accelerating, let's say, over the last few months, to a year to a few months. So as you can see, we are now at about 250 of those, which are already incorporated, meaning they're active. We have quite a few, obviously, in the pipeline as we speak. So we would be closing the year 2023 at a much higher number, right? On the client segmentation, on the right of the slide, we have this pie. I think it's also very important to demonstrate who is usually our client. So we are only a B2B provider, B2B counterparty. The largest chunk of our clients are asset managers, family offices, etc. Here, quite obvious the benefits, right? They're able to utilize our setup in order to launch products and have their investors subscribing through them across the board. We see, and I'm personally particularly happy about that fact, we see an increasing number of banks, large counterparties, brokers who are approaching us, and we work together to place such products in the market, right? And finally, we have a segment of, let's say, a bit more alternative, more custom deals on private equity and, from other investment professionals, right? Now, with regard to the products themselves, we have put together, I believe, a pretty nice demonstration of the evolution of the different products across asset classes. So starting from the crypto-related products, or digital products, as we call them, we have seen a steady increase as well. And last year, as I believe everybody knows, was also a very challenging year for the digital products, given the various events that occurred. Then, as the second group, we have the private products, private deals. So there, we can actually see that there's a very strong demand in the market for this type of products, right? And finally, and almost surprisingly, in close proximity, we see the publicly traded securities. So that will be, let's say, an AMC, or a product that has liquid underlyings, exchange-traded underlyings. As we all know, the main asset management world traditionally has been working with this type of instruments, equities, bonds, FX, structured products, etc. And for us, the fact that the private deals are so close, or let's say in so much demand compared to the public ones, shows exactly what the market is looking at and what the market needs, right? So with regards to the products themselves, as a very quick recap, as I believe most of you must already know, we have three main pillars of our business. In the middle, the public markets, that engulfs equity, structured products, and so on. That accounts for about 45% of our total business, right? And that's the more classic, let's say, asset management tools, products. On the left, the private markets, which have been a key focus for Gen2 over the years, includes basically any kind of asset that can be associated to a certain valuation, and that asset will be used as an underlying in our products. So we span from private equity, private debt, real estate, energy, infrastructure, even art, or literally any asset that can be associated with an evaluation, also have physical commodities and so on. And on the right, on the very right, we have the digital assets. So there we don't, let's say, limit ourselves or our clients into just, let's say, top 5, 20 cryptocurrencies, etc. But we can go deeper into the various instruments and contracts that somebody can trade. There, on the digital side, I think it's worth mentioning that we kind of facilitating a bridge between the conventional and the digital world, in the sense that we don't require the end investor, or let's put it this way, the end investor is not required to have a wallet, has keys, go through the onboarding phase with digital exchanges by himself, etc. But the end investor will be able to purchase a security like all the others in the market through his bank. And then in that security, there will be a setup, of course, that will provide exposure to the performance of these underlying assets. And as we here in Gen2, we have the approach that we would provide all the know-how, all the infrastructure, all the services to facilitate any kind of this product going into the market, so that our client can basically focus on the actual investment strategy and his investors. The final product would be security that you can obviously also have in Bloomberg, with the user Bloomberg screens, the user information, historical pricing, and that is something that can be used, either for, let's say, demonstrating the product to new investors, or for the portfolio managers as well, that the valuation of the product would feed basically into the portfolio reporting tools, right? Now, with regards to the setup itself, so coming to the main, point theme of this webinar, top to bottom, here we see what each of our clients will basically be operating, right? So on the top, this ABC issuer, ABC obviously is a dummy name. Our client can choose the name their SPV would have. That is the issuance vehicle itself. Below, we have in this case 3 particular examples of products. Each one is sitting in its own protected cell. It has its own ISIN and is managed by a specific counterparty. The fact that each product is sitting in its own cell, and that's actually the purpose of the dotted lines between them, means that not only the SPV itself is segregated, is a standalone legal entity, but also each of the products is completely segregated from each other, even though they're issued from the same issuer. So that means that if one of these products runs into a credit event because of whatever market conditions, there is no cross-contamination risk to the note holders of the other products. Now, as you can see at the bottom, each of the products, regardless of what's actually in the basket, I mean, here we have one on equities, credit, project financing, private debt, and a private equity product on the right. Here we see that an investor can purchase this product through his bank. So that also means, of course, for the manager who runs the strategy, that he doesn't need to do AML KYC on the end investor, because that's something that his or her bank will have done by definition, right? Each product has its own ISIN code, and virtually that facilitates the access of the investors into the investment strategies, right? Now, with regards to how does it look, let's say, across multiple clients, right? And how does the segregation really work? So let's assume there are 3 different clients. By the way, clients means the managers of the investment strategies, right? And at the other side, we have the investors. So the investors are the counterparties who buy into the products. The clients, at least from our point of view, are the asset managers, family offices, brokers, etc., who manage a specific investment strategy or multiple strategies. So on our side, for the example that we have 3 different such counterparties, we will establish, we have incorporated a segregated SPV for each one. So each one of these SPVs, once again, is a standalone legal entity. It's completely segregated from each other, and the investors and the manager of the product is not even exposed actually to Gen2 credit risk, right? So it's a completely off-balance sheet solution. Now, once each of our clients receives his own SPV or his own managed SPV, then under that, of course, he can launch multiple products, right? So in reality, we said before, we have about 250 of those SPVs. You can imagine a kind of framework that there will be 250 of these schemes, let's say, out there, whereby each one is completely segregated from each other, right? And all the strategies have the assets, let's say they're all asset-backed. So each strategy is backed by the assets into a ring-fenced account. So each product also has its own bank account. In this particular situation, just to highlight that it's a white labeling offering, right? So Gen2 does not need to appear, let's say, in the documentation or the marketing material of our clients versus their investors, right? It is a setup whereby for each of the products, our client has the flexibility to select the counterparties with whom he would like to work with. So, he can optimize his market access or commercial, let's say, economics when he selects a custodian, broker, storage provider, digital exchange, and so on and so on. And finally, we don't really have a restriction in terms of strategies here. For the purposes of the aesthetics of the slide, we have just selected 3 different clients, with each one launching 3 products. What we see in reality is that sometimes one client might just have one main strategy that he will issue under his SPV, so it will be just one product, and others might have 10 or more, right? That purely depends on the business our client runs. With regards to the offering of Gen2 overall, in a quick recap, so here on the left side, we have the standard case, right? So standard case is that the products are available for professional institutional investors. The minimums are quite low. So typically in our setup, we set a minimum of 10 units of the product at the denominated currency. So that will be $10,000, euro, etc. Sorry. Then we don't really have a limitation on number of investors that can subscribe, right? An investor needs to go to his bank. There will be a term sheet, of course, prepared by us, and that's the legally binding document as for every structured product. So his bank will subscribe and will settle DVP with the bank that represents the paying agent of the product. The products can be across asset classes, as mentioned before. So we have been active in all the public, private, and digital markets so far. And finally, you can have also in Switzerland, at least at the moment, a retail investors possibility, right? So for that, as I believe you can imagine, there is quite a whole, let's say, additional bundle of work that needs to be put together by us. So we will actually produce the additional documents required. So final terms, sort of the term sheet, key information document, KID. The base prospectus will be put together for the specific issuer. That will be created by Gen2, will be registered with a prospectus office. It will be annually renewed as every prospectus, also by us. Annual audit will be provided. Collateral agent will be appointed, and finally we will put together, at least unless our client does that by himself, a dedicated web page, because it's one of the regulators, let's say, requests, obligations, that every product which is available for retail investors, it has a publicly accessible information. So in this web page, we will have the product documentation, the key parties involved, of course, the final terms, the KID, and the prospectus. Last but not least, our clients, once onboarded, get access to our platform. That means that with a login, anytime, anywhere, somebody is able to access all the information across the products. You're able to launch a new product. There is a button that, depending on the asset class, depending on the target type, say if it's equity or debt, it has a kind of a smart algorithm that will adjust the questions that are being asked. So our client is guided through a product launch process whereby all the right questions are asked. And once the submit button is hit, we're able to receive this information in a very standardized way, and then go ahead with the product issuance process, do the due diligence if required, create an indicative term sheet, etc. The idea is that every event, every quarterly fee payment, every scheduled coupon, all the information will be available in the platform. So there will be no need for emails, phone calls, etc. Of course, we're always available, but the idea is to make it as efficient as possible. And for me, at least, what is the most important point is that every time there's an incoming order, either an increase or decrease, there will always be an email and notification in the platform, whereby the manager of the product will be asked upon to accept or reject the specific order. So it's a very watertight setup, whereby our manager of the product would at all times be on top of the inflows and outflows of the assets in each one of his products. Having said that, I think we are ready to go into the Q&A session, and I'm looking forward to your question. Of course, just to highlight as well, the recording will be available soon, so that in case somebody would like to either watch it again, focus on a specific topic, or share it, that will be possible. And the questions can be submitted to us via the Q&A button. So looking forward to the questions from the audience. So we have the first question from the audience. If we use one or more paying agent banks for the AMCs, so indeed we have already multiple onboarded with us. Ultimately, the paying agent is a technical role that is covered, let's say, by our setup, also in terms of fees. So our approach is to just discuss with the client. First of all, there might be some preference depending on existing business relationship, etc. Other than that, we give the option to our client to choose, right? So yes, the question is there are multiple already operating with our platform, right? Second question, is the Guernsey the only jurisdiction we currently offer as issuer domicile? Indeed, at the moment is the only one. So all 250 or so of the SPVs have been incorporated in Guernsey. We are actually considering other options. So it's quite likely that in the not so far future, there will be more options. Ultimately, you know, there was obviously a small selection process, right? So there are a few jurisdictions around the world who are available for this kind of business. The team basically weighted pros and cons, time to market, and so on. And then Guernsey it was and still is the jurisdiction of choice. It's anyway also jurisdiction that many other players in the market are using, right? So we have been very, very happy with the cooperation with our partners in Guernsey, and that is why it remains the main jurisdiction for that, right? If retail investors across the EU buy these AMCs, so as I mentioned before, at the moment we can support professional institutional investors globally. There is an exception, by the way, an asterisk, that at the moment at least we cannot have US persons buying into the securities. We can have investments in the US, but not US persons buying into. There is also an ongoing project on that, and hopefully relatively soon it will be also available. But at the moment, retail investors we can have in Switzerland only. There are also a project running, I know I sound a bit like a broken record, that we will also enable that, since we see a lot of interest in Europe, right? What are the costs of setting up a platform and operating? So naturally, the total TR, total cost, would depend quite a bit on the size, A, and B, on the nature of the investments, right? Naturally, if somebody would like to launch an AMC, a product on equities, bonds, or let's say what we call bankable assets, it's a much, much simpler setup and much more, let's say, cost efficient than if somebody would like to create a basket of VCs or of private equity or private loans, whereby we're going to do the due diligence and a number of other operations, right? So we have kind of like a small upfront fee structure, whereby we open the accounts, we do the due diligence, we create the documentation, we open the products on SIX, which is the clearing broker, Swiss exchange. And then we have a running fee per annum, which depends on the actual total NAV across the same SPV. Obviously, our clients are able to also charge fees on the products, right? So each product normally will have a management fee, potential administration fee, performance fee with high watermark or restrike, etc. Typical market conditions. There can also be upfront fees, especially for, we see that in more private equity deals where there's significant cost required from the client side. to kickstart the business. And of course, there can be distribution fees per order, and that is also something which is managed through the platform, right? So that the paying agent and the custodian bank of the investor can settle always at the right price. Which institutions are providing the bank account? So it depends a little bit on the nature of the product, right? If we're talking about products that have trading accounts, equities, bonds, etc., there are many options. Obviously, there are quite a few counterparties that we have been using, or we have been working together quite a lot. So with these counterparties, the time to market and the overall framework is faster compared to counterparty bank that we would be working for the first time. So basically, the idea typically is that when we have a request for a product from a client, we will go a bit into what kind of assets, what is the expected size of the strategy, etc., and then either our client will have the preferred counterparty, in which case we're happy to work with, or we can provide some options from our valuable partners, and then it would still be our client's choice in the end with whom he would like to work with. What are the requirements of a potential client of Gen2 to create his own SPV? So basically, that would also depend quite a bit on the nature of the strategies, of the investment strategies, and also at the second, let's say, layer on the jurisdiction of the client himself. So we as Gen2 obviously do not impose any kind of requirements on our side. We would always go by the regulator and the relevant framework. That means that, for example, if a client, the manager of the product is based in the UK or Hong Kong or another jurisdiction, the local rules would be the ones that are going to be taken into account. So if, for example, somebody would like to do an AMC on equities, which is a regulated activity in most markets in the UK, then it means he needs to have the relevant FCA-related classification, right, or licensing, and so on and so on. It's not that because Gen2 is based in Switzerland, we will impose the Swiss framework for our clients around the world, right? And I believe, didn't touch upon this point, but we have now seen clients from probably more than 20 or 25 different clients based there. Of course, their investors are, captured in a very wider group, but basically the idea is that every time we onboard a client, the jurisdiction in which he's based will be the one taken into account for the specific activity, right? I have found out that many non-Swiss banks cannot offer certificates to the clients. What can you offer? So that point actually tackles the let's say commercial approach of the banks versus our security. So to clarify, the security, it's a DVP settled security, delivery versus payment, that has an ISIN and is cleared Switzerland by SIX and Underworld usually by Euroclear Clearstream, etc. So there is no, let's say, functional or economic way why a bank around the world would not book this certificate. Of course, nevertheless, that means that also a bank still maintains the right, of course, to decide whether they would like to make available a specific security to their clients, right? So on our side, what we can say that it's a security like any other with an ISIN, and we're also happy to engage in discussions with our clients and their banks if required, in case there's some information missing, let's say, on their side. But of course, that's also a discussion that our client would need to have with the custodian banks, right, to make sure that they're willing to have the security booked. In Switzerland specifically, since it's our home market, about 80% of our business is still in Switzerland. We're getting more and more international, but of course the bulk is still in Switzerland. We have orders on a daily basis from, let's say, all the main banks, at least around here. So it's already very, very well spread. Another question, why are you calling private debt product a CLN? As CLN is a vanilla structured credit product combining reference bond and CDS, etc. That is actually a very good question. Well, as you very correctly mentioned, a CLN normally is a product that has a deposit and it has a CDS, which is bought from the market, right? That's also how I have been introduced to CLNs many years ago. Now, in our case, we call it the CLN because it virtually replicates the same exposure and it exposes the end client in the same economics and in the same risks, ultimately, since he is investing an amount of cash that is being into a loan agreement and is given to a target company in return for some interest normally, which can be paid quarterly, semi-annually, annually, etc. And of course, that means that the investor is participating in the investment, being exposed to the risk, right? Which is why he's compensated. So you're right. Typically, a CLN is exactly as you described, but virtually in our setup, you can call it CLN 2.0 or something like that, but it's kind of like the same economics and the same functionality of the specific payoff. Another question, do I need to sign an individual agreement with a paying agent? So on our side, we have a contractual framework that we make available for our clients and partners. And that means that there is no need for one-to-one agreement or cooperation, let's say, in that sense, with the different participants of the setup, being the paying agent, the brokers, and so on and so on. We will orchestrate that. Our legal team, being very specialized at that, will take over the task of opening different accounts, always in the same standardized way, with the same documentation required, etc. So ultimately, no, in that sense, you don't need to interact directly with the bank. But of course, you know, especially when we're talking about asset managers having trading access in accounts and so on, the relevant onboarding between the bank and our client will also take place in this situation. For your SPVs which allocate to private markets investments, are commitments fully drawn down from day one, or is it capital call future possible? So that is actually a very common question we have when we're talking about private markets, and thank you very much for raising that. Virtually, our setup is no fundamentally different than the normal situation when somebody enters into an agreement that has capital calls. There are actually two main possibilities. One is, as you mentioned, to have the capital fully drawn upfront, and then we can enable the product to invest in money markets or other liquid instruments until the capital call comes, in which case these investments are liquidated and the capital flows into the actual investment. That is normally something that our clients would do when the event, the date, let's say, of the expected at least capital call is not too far in the future, or is not a very significant portion of the total investment amount. Alternatively, what can happen is that the initial commitment, let's say, is the amount invested, subscribed into the note, and then basically every time there's a capital call, the investors will need to purchase more securities of the same product with the same ISIN, so that they fund the top-up transaction on the asset side. One perhaps benefit by having such a setup is that in the case of a capital call, the investment manager would just need to virtually have more units of the product purchased, but not necessarily from the exact same investors, right? So in that case, in most cases, actually, it's the same investors, right? So they have an agreement, credit letter, or some kind of other agreement with the manager, and they will purchase more units, but he still maintains the flexibility, let's say, to also attract new investors in case that's required. So these are the two main options and the two treatments, let's say, that people utilize for this kind of actions. So the other question is, what is the break-even AUM for an AMC passively tracking an index? How much does it differ from launching a UCITS ETF? So as this is a security, a structured product, and not ETF or a fund, there are vast difference in terms of time to market, flexibility in terms of the different actions, investment universe, investors, and so on, and in terms of operating actually this setup. So talking about actually tracking and passively tracking an index that probably wouldn't even need to be an AMC. It could even be a tracker certificate on this index. Now, for these products, I would say even from few hundred K to $1 million or two is normally something which well justifies the cost, right? And we're talking about the time to market, typically of a few weeks, can be 2-3 weeks. Is a very straightforward setup, and all the counterparties are already onboarded, or maybe a few more, but we have very let's say fast time to market normally, and a very aggressive, I would say, cost structure. So to your question, you don't need to have 3, 5, 10, 20 million to start this business. We have quite a few more questions, and I'm very happy with the engagement of our audience. Can you help with private investments, especially distribution? That's also a question we get quite often. Gen2's business model is that we would never virtually compete with our clients, right? Which means that we would never go in the market and sell directly some of the products. What we do, though, is that we have a number of events, physical and virtual. The flagship, of course, is Asset Trust, right? And by the way, the largest Asset Trust, so it's our Investors Day. We have our clients, we have our partners and sponsors gathering together in Zurich on the 23rd of May. So I will be also looking forward to be greeting everybody there. So we can basically expose our clients and their ideas into our network, to our partners. We're operating an ecosystem of almost 250 counterparties now. And as per the breakdown we saw before, again, most of them asset managers, family office, etc., but we will not engage direct distribution for that purpose. Another question, can you show a step-by-step guide of how the platform works? Also a very good point, and that's something we get a lot. So what we will be very happy to offer is that we have a small session whereby we can go live platform. We can see the different functions, the different options, how does the overview work, the incoming orders, and so on and so on. So we don't really offer a kind of ready kind of demo, let's say, in that sense, but we are always very happy to organize that in a session. On regulation, well rated, in the case of tokenization, is the underlying transaction always being regulated, even though other jurisdictions? How is the cross-border jurisdiction harmonized? Okay, that is quite a few questions in one. Typically, the way it works is the following, especially on the tokenization side, which is a, let's say, growing business, but it's, at least in my opinion, still not very mature. So there, we will treat each case separately. Indeed, we can produce tokens, right, for different investments. And there, basically, on the distribution side, it will be more or less the same framework that the normal products, or let's say the products with an ISIN and are settling DVP, will follow. So it is not, it's not a binary answer, unfortunately, and I will be very happy to take up the specific case and go through the options and what exactly applies, right? Maybe just a couple of more questions, not to get overdrawn. If we are regulated as Gen2, so Gen2, let's go back to the off-balance sheet setup, right? So Gen2 will actually never be a counterparty in one of the transactions related to the products, right? We will always have banks working with each other, settling for the transactions, and we will have, when necessary, regulated counterparties managing these investments, right? So from that sense, the Gen2 itself does not need to be regulated, but we have basically every transaction, every part of the cash flow being done by a counterparty which fulfills all the criteria based on their jurisdiction that they're being based, right? Maybe one last question. Do you provide only visibility on Bloomberg or also continuous pricing? So basically, let's say reevaluation frequency of the product is something which basically depends on the basket, right? On the asset. For equities, bonds, crypto, and other products that have daily liquidity, daily price updates, obviously we will do daily reevaluation. So there, what we do is we provide the possibility to have end-of-day pricing in Bloomberg. So every day, our client, his investors, etc., will see the end-of-day price of the product. In case that we talking about more private investments like private equity, private debt, and so on, obviously in most of these cases, it wouldn't make a lot of sense to have daily reevaluation of the product because the price would basically be the same, right? So in that case, we will have at inception, when the product is being launched, we'll discuss with our clients what frequency would make sense for the specific assets. So that would be quarterly, it could be semi-annually, annually, and so on. Now, with regards to the continuous pricing, the products trade always at end of day price. And that is actually something that, at least the feedback from our clients, is that it helps them manage these products in the sense that during the day, the orders are collected and then they are executed at the end of day price, right? So that means that the manager of the product, talking, for example, for an AMC on equities, does not need every time he receives an order during the day to go and immediately rebalance, create cash flows, and so on and so on. Having said that, I see there are quite a few more questions, but I believe it would be better to take it in a one-to-one framework going forward. So, ladies and gentlemen, thank you very much for your participation. Once again, we're humbled by the number of attendees and the interest. I will be always available through the normal contact information for any other question or any topic around creating a product through our issuance platform. Thank you very much. Wishing everybody a fantastic day. Thank you.